So this is a P&L. We'll kind of just start at the top, just so, and we'll put a link to this in your chat, right, Nate?
Yep. We'll make sure that anyone that's listening to this or watching this has access to this afterwards. You can click on the comments of wherever you find the show.
And for the podcast audience, I'm going to just verbally describe everything we're doing here, in case you don't have the visual, and we'll also give a link to the Excel file here. So this company, it's around a $400,000 a year revenue business, and the owners have owned this business for approximately 15 years. They've grown it and managed it really well. And as we went to market this and take it to market, we started to analyze the profit and loss statement and look for some of these personal expenses. And it turns out that there are a number of the owner's personal expenses and other non-recurring expenses that we treated as an add back to the what we call SDE, seller discretionary earnings, essentially the free cash flow of the business. And then we add these add backs to the net income to come up with the SDE, and that's what we use to base our multiple on. So in this case, we've got expenses here, automobile expenses. These are the personal automobiles of the owners. They're able to expense business vehicles, for tax purposes, but certainly those vehicles and the expenses of those vehicles don't get transferred to a new owner. So we treat those as an add back. So we basically add up these line items for the whole year, and we add that to their net income. Charitable contributions is another one that shows up here. It's a relatively small dollar amount. There's $218 in charitable contributions, but that is that's a discretionary expense. A new owner could choose to make charitable contributions, but they're certainly not going to be required to do that. Computer and internet expense is an interesting one. This is their home computers, their Wi-Fi. This one we treat it as an add back because it is their personal expense. This is one that came up in our diligence as the buyer determined that they were going to have the same expense going forward. So this was actually one that the buyer pushed back. And Nate, how often is it when you're on your deals that we've got add backs represented in the transaction, and when you get into due diligence, buyers want to talk about them, validate the add backs, and sometimes push back on the add backs?
I don't usually see it happen too much onesie twosie. Usually it happens on the front end as a part of the overall negotiation of the business. So prior to the LOI, being produced on the buy side, usually they go in and kind of, figure what's going to work for them. And then as they approach the business with an offer, it's kind of here's the offer, and infrequently, quite frankly, to answer your question, we don't do a whole lot of, I have not seen a whole lot of buyers, dig into the add backs in due diligence. Usually it's done kind of in the negotiation phase up front with the LOI.
Another big one that we see a lot are salary expenses of the owner. And so this one is worth thinking through a little bit. So in this case, the owner's spouse is taking a salary of $19,800. She was involved in the business, but that cash flow is going to be available to the buyer. So that is an add back. And then in addition, whenever you have wages that are getting added back, you need to think through the taxes and the benefits that were also associated with that employee. It's not uncommon for small businesses to have family members on salary that don't actually have a role in the business. Those are absolutely add backs. In some cases, we see where the owner's taking large compensation, where they've got a very profitable business, and they're taking compensation that is in excess of what the average wages for that role would be, that will add back the amount that's over the replacement salary. So if a new buyer comes in and they've got add an employee to do what the previous owner was doing, the difference between that salary and what the old owner was paid could be an add back. So to run through some numbers there, Nate, if you had a business and you're taking a $500,000 a year salary, and the buyer comes in and is going to hire a manager to do the work you've been doing for $100,000 a year, we would treat that as a $400,000 add back, because that extra $400,000 will be available to the new owner.
Yeah, and a comment here, I see this actually happen a lot the other way, especially on larger deals. The owner of the business is not on salary. They are not on payroll. They're just taking distributions, or they're pulling their equity out of the business on the balance sheet. And a buyer will commonly say, well, someone's got to run the business. I'm going to have to either hire somebody, or I'm going to have to pay, a consulting agreement to the founder to stick around. And it's going to cost me at least $150,000 a year. And that is something that does come up regularly on the deals that I've worked on after the LOI, and they'll discuss that as a part of due diligence and what's fair remuneration for somebody who's doing the operational aspects that the founder is doing. And if in fact the founder is truly hands off and is doing, kind of serving more as like a board member or very passive, at that point he already has a team, usually, some executives or upper level managers that's running the business that is included in salary. And in those cases, most buyers can understand that. Although it still seems to be fairly rare in that, our marketplace focuses a lot on the $1 million to $150 million size businesses. And even in that range, it's still fairly rare for me to see owners that are truly passive or hands off. They typically have some level of active involvement in the business.
Yeah, that's a great point. And when we have those Adbacks for staff that needs to be added after the transaction, those are considered to be negative Adbacks. Those are reductions to the net income, and then we apply the multiple for the particular deal to that number net of that negative Adback in that case. That's a great point.
Yep, you hit some good ones in here up above that though, like retirement, and that's I never have any pushback from buyers when they're the owner has 401k or some kind of retirement planning. That's easy owner benefit. That's
this one. Another category here that was pretty significant for this deal was the shareholder medical insurance. So both of the owners' personal health insurance are running through the business, and so this was in this case $6,500, and it was over $11,000 in the prior year here. So that was a significant add back. That expense goes away after the sale of this business.
Times that by 5, some of the multiples we're seeing on businesses is $30,000. That's a whopper.
Be sure to subscribe and hit the bell for notifications about new videos and interviews. And introduce yourself in the comments. Are you a buyer or a seller?